other than like my only exposure to stocks for most of the last 20 years was I had put, or at least until I started learning about investing, was I would, whatever was in my 401k. So I would max my 401k and, SIG would give us a match and all that. And I would just plow that all into the stock market. But otherwise, in my mind, I graduated in 2000 and started, right into trading. And I said, let me buy a place. That was like, seemed like what you're supposed to do with money. So I bought an apartment. That was like the first thing I did. Like, first of all, I never thought about investing because it wasn't a pressing problem, because I know I want to buy a place. So
okay, so this I want to press pause here because it's this difference between trading and investing. So maybe what needs to happen here is you need to define what you mean by investing, right? Because investing can take so many different forms, and how is it that you spent 16 years trading, but that's not what you describe as investing? So what is investing?
Yeah. So investing in my mind is, so it's this thing that happens once you have savings, or that's like, first of all, that's how I think of it kind of now. Is investing is I have this like corpus of money, I want it to grow, and your time horizon is basically longer. Trading to me is this transactional game. It's like everything I traded had an expiration, so it has got an endpoint. There's a like it's almost like if all you did was invest in catalyst driven stuff, that's what trading sort of is. It's just, I know that there's an endpoint to this. There's going to be some convergence to this. The entire concept of, a PE that could get really large, or something that can something that would diverge a bunch from intrinsic value. It's like in options, we're going to find out what the value of this thing is going to expire, and there's going to be a realized vol, and we're going to know the outcome. And so, and with a future, it's the same thing. Like a future cannot just trade wherever it wants to. Eventually, it has to converge with the spot market, which is a physical market where people are making actual decisions about, am I actually willing to buy this barrel of oil, and I got to use this barrel of oil, and how much when I go refine it, how much could I sell it for? Like there's like real economic decisions that have to happen there, and there's expirations. So when I think of trading, it's shorter term in nature, more transactional. It's everything's a catalyst. Whereas investing is almost, in my mind now, I almost think, it sounds stupid, but reinvesting is probably the better word for it, because something could be cheap, but what's opaque to you when you go to buy it is what really matters is the internal rate of return on their projects and how they can deploy capital. Is that going to be true? So sometimes when I think of today, if I think of a stock, hey, that stock looks cheap, I would actually might flip that in my head and be like, actually, that's an implied low forward rate of return on capital. That's all it is. Like a stock that looks cheap is one that has an implied low return in the future. That's so in investing, you really can, the future is like a big part of that payment. I guess if you were to do a discounted cash flow, it's like what those balloon payment at the end, or whatever that value is at the end, carries a ton of weight in that computation. So it's a completely long-term sort of thinking. And I didn't think like that. I just think of everything as a game. Also, again, it's like, I was really naive. I mean, it's like, again, it's embarrassing. I was really naive. I really would think, like, why would anybody do this? Like, I could, like, in my mind, like, I'm looking at getting edge. Like, I'm like, this thing's worth 2.25 and I'm selling it for 2.5. Like, this is, I know this is a good trade. I know, I just got to manage the risk on this thing, but I know what the edge is. I'm like the house in a casino. I thought everybody that's out there investing, why would you do that? I said, this is like, you're a customer. That in my world is like the biggest, was like, not that it's an insult, but a customer is my counterparty and I don't want to be them. So for the most part, I thought of it, I didn't really understand. I didn't connect all the dots. It wasn't until appreciating alpha or edge and capacity. It's like, I didn't realize the guys that were running my firm, they were just plowing all their money probably right back into building the firm. But there was nobody ever talked about what those guys never talked about what they did with their own money. So when I looked out at the rest of the investing world and I said, people are out there trying to earn 10%, like they're suckers. What the heck are you going to do with 10%? What good is that? So it's just super, super naive. I mean, again, it sounds absolutely ridiculous, but I survived like this for a long time, like just not understanding. And I wasn't a person who went and read, like I didn't read a ton of investment books or anything like that. I was more concerned with trying to understand how the game was played.